Hey, what is up everyone? Welcome into the channel. My name is Brent with Investing on the Go. Today we're covering the topic of I'm living out of my dividend portfolio. We're going to go ahead and cover the weekly update. Here's how much I made last week in week 3 of 2026. So in today's video, we're going to be covering three things. Current news going into the fourth week of January, which is massive. We have some huge earnings. We'll go ahead and cover the four companies that I'm looking forward to this week going on earnings. We're going to go ahead and cover last week's buys. We did make some new buys over on Robinhood. I'll go ahead and showcase these, the ETF that we purchased last week, as well as how many shares, how that affected our portfolio going forward. And then we'll go ahead and cover the massive amount of dividends that we received last week. Expectations versus reality. Was it better? Was it worse? Stay tuned to find out. So with that said, if you guys are brand new here to the channel, I would really appreciate if you go down below, smash that subscribe, smash that thumbs up. It really helps out the channel, helps out the algorithm. And of course, this is all for fun and entertainment, educational purposes only. So with that said, check out the pinned comments down below. There's a link there to the Discord or some other goodies as well. Okay, so quick recap if you guys are unfamiliar with the channel and portfolio. Right now, we are completely flowing out of our brokerage account, living from our dividends with no 8 to 5. We have dividend companies within our portfolio that pays out dividends because they're covered call ETFs. Plus, we have other miscellaneous income coming into the account as well. Soon, I did hit the 3,000 milestone for this YouTube channel to be monetized, but in order for AdSense, that is still another threshold that I'm working towards. So right now, I'm able to get a few of the minor things put in place, but I haven't started that yet. And then I have my real estate business I work on the side, and I'm working to grow that this year as well with the time that I have. A brokerage account, all the excess or all the money goes into the brokerage account every week. We are putting our bills, our daily expenses on our credit card. At the end of the month, when the dividends have been paid out into the account, we pay down the credit card, we pay down our mortgage, we pay down our car loan payment, and then any excess funds that we do have, hopefully, when we're budgeting every single week here on the channel with our budgeting videos, that'll all be reinvested back into the brokerage account into appreciating ETFs. Without our high yield, they pay us out a substantial amount, but they also have no NAV erosion, which is net asset value. So I put $100,000 into it. I would like my $100,000 to remain there or grow steadily. 1 to 5% per year is fine, so long as I'm able to get a healthy payout and still maintain current living out of the brokerage account lifestyle, right? So that's kind of the breakdown there. Now, let's go ahead and jump into number one market news. There's some huge news out there. So this is the Super Bowl week of the Magnificent Seven. There are 4 of the most influential 10 companies going earnings this week within the next 72 hours, as Gemini says here. So since these companies are representatives of a huge part of the S&P 500 and the NASDAQ, S&P 500, they're almost 30% of that index itself. So we have Tesla going earnings Wednesday after hours, Microsoft going earnings after hours, Meta going earnings after hours, and Apple going earnings after Thursday after hours. So these are huge, huge companies right here. Tesla, their robotaxi progress and energy storage margins will make a huge dealio. I know everyone's been kind of talking about robotaxis, robotics, their robots and such. Whatever they say during their earnings call will be massive. Azure with Microsoft growing demand and AI. Is it going to play out the way they'd like? We'll see how it goes. Meta, this is one that I'm looking forward to. My Meta position dropped huge this past week. I was actually in our last video when I was covering my entire portfolio breakdown. My Meta position was up 7-8% in the 650s, 660s. It had fallen all the way down below my average price of Meta of 608. One time when I looked at my portfolio, Meta was sitting at $605. And oh boy, I wish I could buy more, but I just didn't have the capital in that account to buy heavy. So in that time frame, since I think it was like mid time this week, during this short week period, Meta dropped from $650 down to $605, and then bounced back up to $658 close on Friday. It had a massive swing. I believe my position is back. It was negative to being positive by more than 7%. So it was a huge thing, but that's my biggest single holding. And I'm looking forward to how's their AI spending and ad revenue efficiency coming from Facebook, right? Facebook owns WhatsApp, Facebook, Instagram, and they have the VR goggles, which is big with them as well. And I'm looking at how they're going to be monetizing this. I don't believe they're excessively spending, and they don't have a whole lot of products, right? It's a service-based company, so I feel like they're very efficient in their methods. So that's why it's one of my biggest holdings. But Tesla, I owned Tesla a very long time ago, maybe back in 2015, 17 timeframe, way back before it split. And I haven't ever been comfortable with buying at anywhere of these prices, but it had fallen. You can see here, old Meta actually had a death cross back here, and I had posted in the Discord that hey, we hit death cross. This could have been a bad opportunity where it could have just fallen much more. During that time frame, I honestly wish I kind of sold off, took my profits of 7-8%. These are held within retirement accounts. I wouldn't have been taxed on selling these, captured that high 8% capture, and then repurchase. But that's all hindsight, way behind us. Microsoft is forming a death cross right now. We had that 50-day cross underneath that 200-day, and it did drop. Honestly, if I wanted to at this moment, I would, as much as I like Microsoft, I probably wouldn't drop Meta for it. So Microsoft right now looks like a good opportunity, but it could continue to fall. It really just depends on their earnings here this past week and just what's their demand for Azure, right? There's Azure, there's Amazon, right? There's the Google Cloud, Amazon Cloud, Azure Cloud. There's just a bunch of companies, and I feel like Amazon is one of the bigger ones, but unfamiliar with that. Apple here continuing to fall, right? It broke right on through that 50-day, continuing to fall. It is potentially finding support here in that 248 range, but it could fall all the way down to that 200-day. We shall see after earnings. Now, why this week is going to be very volatile, we have the Fed conflict on Wednesday afternoon. Not only do we have after hours earnings with Tesla, Microsoft, and Meta, we also have the Federal Reserve will announce for the first interest rate decision of 2026. As of right now, it is looking very hawkish and unwilling to cut interest rates, especially with last week's numbers showing, I think it was Friday, there was some numbers that came out that were better than expected in terms of where we are at as economy. And then how good is the AI efficiency? Are companies spending way too many in billions and not seeing that return for what they're actually spending? So investors are demanding to actually see profit from those investments of AI spending that was back in 2025, or if they're going to be revising their future earnings lower, such as what Netflix did. Yeah, Netflix is right here. Let's see here. Anything there I want to add? No, yeah, NVIDIA is not scheduled till February, so we still got a little bit of time here. Google, Amazon, and NVIDIA, which are in February. But right, we just saw last week Netflix came out, they beat in earnings, they beat in revenue, but they still fell by 5%. So absolutely, Netflix here is the perfect canary for the coal mine for what we might see this week. Netflix actually reported a double beat last Tuesday. It beat on earnings, it beat on revenue, it crossed a massive 325 million subscribers, yet the stock tumbled by 5%. And that was all because they were driven by forward weak guidance in 2026. Even though the past 3 months were great, management projected revenue growth of 12 to 14%, which is a step down from 2025 pace. So, they spent a lot last year. They were expecting to get a greater return this year with how much they put forward in AI, but they're still guiding lower, which was unexpected, and that drove their share price down. If these companies come out and saying, hey, we spent a ton of money on AI last year, but we're not seeing any return going into this year and cutting back on that AI spending, we could see Tesla, Microsoft, Meta, Apple falling even further than where they're currently at. But if they begin to move higher, guess what? Right now, the S&P 500 is standing kind of at a wall. It's hitting 690. It can't cross over. It's almost at near all-time highs right now. But if it can actually have some recovery in these tech companies, that is what could be driving these companies and the S&P 500 forward. Otherwise, if there is a sell-off and they guide lower than expected numbers, then we could see a pretty sharp sell-off, retesting 680 within SPY 670 or even lower. So there's some big, especially with the Fed, right? There's a lot of stuff happening this week that's going to be affecting the market. So I'm really looking forward to what's going to be happening out there in the market. Now, jumping into number two, my buys of the week. Now, I had $1,000 over on Robinhood with the massive pull down on Monday after the Greenland sweep. We went ahead and dumped the money into the market. So boom, we had on January 20th, which was not actually Monday. I waited a little bit to see how it would all settle. So January 20th, I went ahead and made my $1,000 order on T-Spy. Now, I'm still not over the 30-day window of when I sold SPY I and QQQI, so I don't know if I move from one broker to the other, if I were to purchase my SPY I or my QQQI within this broker, that it would cause issues with the washing sale of the other platform, and I don't want to deal with that. So I just went ahead and made a purchase of T-Spy, and I have plans to use the capital within this portfolio, the dividends that are created within here. I eventually want to move my SoFi capital into this portfolio, get it invested into some covered call ETFs that are producing income. I want to use the income that is created from the dividends in order to set up some auto pay features from other platforms to see how it's able to draw money. Does it draw it efficiently? Is it quick? How fast do the payments hit my account on the payment date versus do I have to wait a few days? So I'm just looking to test the platform Robinhood. How efficient is it before I use it long term, if that's something that I want to do? It's just due to them having a little bit different options than what Fidelity currently offers, especially with the margin rates and stuff. So that's just things that I'm looking to prepare for going forward. But we spent $1,000 purchasing T-Spy. We purchased 39.556 or 39.56 shares at an average price of 24.28. Now, I went onto the platform on Friday, and here we were up 0.63% from where we purchased. Now, after hours is really interesting over on Robinhood. There's a lot of things that are kind of going on after hours. This is mostly not due to an ex-dividend date, but mostly just due to the low volume. A sale after hours when the market is closed can show huge negative losses such as this, but it's not the actual value of the company shares or your portfolio. So you can see here that while on Friday at close, we were at $1,006.33. The market itself hasn't fallen after hours by 4.x amount. It's super speedy. But that's why it's showing a loss here of, this is showing 4.75, this is showing 4.03. I think the numbers here are a little bit incorrect. But I went ahead and logged those into my weekly journal here. I had made my T-Spy purchase, made a buy, 39.55 shares at an average price. So that's the current price. My average price there was 25.28. Is that correct? Yeah, was correct. 25.28. I'm up roughly 0.75% as of close on Friday. That was an initial buy over on Robinhood. There's no profit taken at the moment. There's no dividends that have been received, but I'm looking here to add dividends or something here within, and I need some sort of tracker that shows my average price, my current price, the dividends that paid in, and how it's going to, there's a difference within the current price of the like the market price and when the ex dividend gets removed, because I want to do some total tracking. So I am going to eventually add that in where I'm able to track total return of my holding, not just the current price of it in appreciation, but also the dividends that have been paid out, whether they're reinvested or not. I just want to kind of showcase that kind of side by side. But we also updated the dividend portfolio. So we updated the T-SPY shares by 39.556962. So we went from 39 or 3,986 shares to now 4,025 shares and 55 cents. So here, if we head up to T-SPY, there's our total shares that we've earned. Our position, it looks like it's down 0.31%, and it probably is in actuality. TDAC did have an ex-dividend date here last week, which we're going to go ahead and cover in just a second. Bitcoin is also down pretty good. It had a nice recovery last week, but over the weekend, it's been losing a little bit of that. I'm not too worried about that. So let's go ahead and cover number 3, the massive amount of dividends that we were paid out. Now, over on Fidelity, that's the current broker that I'm using to live out of my brokerage account and pay off our credit card, mortgage, car loan every single month. And we're using that as sort of our living out of our brokerage account lifestyle right now. Now, on the 21st of January, we were paid out from TDEC. This is that one that went ex-dividend. So while it shows that the price that we're down here, if we look at the dividend portfolio, it shows that we're down 2.14%. That's because it looks at the price here, the current price, and the average price. Our average cost basis probably gets deducted, right? There's a return of capital that gets removed from DDAC. I'll have to look at what it is, and we can adjust this down here a bit. But our total return isn't really 2.14%. We'll have to look at how we can adjust this in a bit. But we were paid out $1,447.99 from dividends here on the 21st of January, followed right behind by IAI. This is the dividend NEOS ETF Trust Gold High Income, $159.61. We had the NEOS ETF Trust Russell 2000. We got paid out $1,265.66. And we had the NEOS ETF. This is the Bitcoin High Income ETF as well. We were paid out $291.96. So I went ahead and added all these up. BTCI, $291, Russell 2000, $1265, gold mining, $159.61, and TDAC, $1,447.99. In total, with all of these four so far, we were paid out $3,165.22. Now, the one here that is in the portfolio, that is also expected to pay out, but doesn't pay out until early February. So the interesting thing here, I know QQQI and SPY have ex dividends really close to the same dates, right towards the end of each month, whereas TDAC has an ex dividend kind of in the middle of the month, right around that 19th, and then T-SPY has an ex dividend right around the 3rd, 4th of the month. So it's not till the 3rd or 4th of February where TDAC will go ex dividend, and then they'll pay out on the 4th or the 5th. So that is when I'll receive the rest of this. So this will still be able to cover. I probably won't spend any of this until the mortgage gets deducted. And then once the 3rd of February hits, when my credit card is due, I'll use current capital in there to pay down the credit card. And then I'll have probably some negative margin. Fidelity will be like, hey, there's a negative margin. If this isn't filled with an X date, then you're going to begin getting charged interest. But then we're going to have that dividend roll in, which will pay down the margin, and we shouldn't incur any interest during that time frame. But let's see here. Yeah, okay. So now we're going to do the comparison between here's what we were paid and what I expected. So if we jump over to the dividend portfolio, I copied these numbers here earlier. Now, if we take a look at BTI, based on the number of shares and what I had in here as their dividend amount expected going into January 2026, I was expecting 0.99. I was expecting $279.08. Instead, we were paid out $291.96. So that is an increase there of roughly what, $10 difference. So that's an increase of $10 or $11 that I wasn't expecting. We also had IWMI payout. So IWMI, that's that Russell 2000. We were expecting 1,246. We received $1,265.66. So again, that was another difference there of around what 20 some dollars as well there. So $20 difference there. So far, it's a $30 difference in our pocket. Then we had IAUY. That's that Neo's Gold ETF. IAUY. Oh yeah, right here. I was expecting $139.28 paid out within the account. Instead, we received $159.61. So again, there's another $20 difference that I was expecting right there. So right now we're at $50 difference to the upside, so that's positive. And then TDAC right here, we were expecting $1,439. We received $1,447.99. So there is a good amount right there. I can difference here, difference, and we could take here N9 minus M9, and just we can do that. Autofill it. Nothing there. I'm just gonna get rid of that. And there's the difference. So we made $18.93 extra from the Russell 2000, $20 difference gold ETF, $8 difference in the TDAC, $12 difference in the Bitcoin. So the difference between our expected income and the actual paid out income was $60.23. And as I just said a bit ago, we also added to our position in TSPY. So TSPY is not going to be going ex-dividend until February 2nd, February 3rd. And we've already been able to recapture more shares. I just purchased almost 40 more shares. So I'm expecting that TSPY is probably going to be coming in a little bit higher than what I'm expecting. I'm expecting $1,266.93. $1,216.93. We're probably going to come in just a little bit higher than that. That means our estimated monthly payout, where we are expecting $4,321, is probably going to be closer to $4,390 or even $4,400 or so, right around that time frame, or right around that cash frame value. I don't know what to say there, but it is expected to be a little bit higher than my expectancy. So I think that's good. And then any excess dividends, as I said, any dividends that are still sitting in cash after we've paid down our debts is going to be reinvested back into our high appreciating ETFs. Now, am I going to be continuing to hold on to TDAC and TSPY? Honestly, they are great ETFs. They have a nice yield. Their return over the last year was greater than both SPY and QQI. But the main differences in them is just how they do their contracts with options, how they're taxed. They're not taxed as efficiently as I would like. So we'll see how it goes. I just don't want to be paying an excessive amount of taxes at the end of the year versus where I knew I would be with QQI and SPY. So that's kind of where we're at the moment. So eventually we're going to be taking the excess dividends and reinvesting it. I do believe that going forward into next month that I am going to be selling out of TSPY and TDAC when they get to a point where they're recaptured their recent loss, right? When the market recovers, if it recovers within this past week or so, great, right? We're coming right up on the 30th of January when my wash sale will reset, and I'll be after my 30-day window where I can begin to buy my SPY and QQI again. But until that date and until the market actually makes some recovery, I'm going to be holding tight with my positions in TSPY or TDAC until I find opportunity to move elsewhere. So that is going to be it for today's video. Let me know down in the comment section below. Are you guys interested in any earnings in Microsoft, Meta, Tesla, or Apple this week? Own any of the companies? I know I'll be watching very closely when Meta goes earnings and just take a look at the opportunity there. I believe that Meta should do well, but at the same time, everybody believe that Netflix will be doing well as well. So that is going to be it for this video. Let me know if you guys are interested in hearing or listening or discussing any other topics here on the channel. I would really appreciate it. drop a comment down below. Once again, if you guys are brand new here to the channel, I would really appreciate if you could down below. Smash that subscribe button, smash that thumbs up, drop me a comment, check out the pinned comment down below, join the Discord, ask any questions there. And that is it. Thank you all for tuning in. I will catch you guys in the next one. Bye bye.